You can start.
Yes, thank you very much. Good afternoon, or good morning, or good evening, depending on where you are. I'm Bosco Iyacu. I'm the CEO of Access to Finance Rwanda. For those who are not familiar with our institution, we are part of the FSD network across Sub-Saharan Africa. So I'll be the host for this session on practices and strategies, session 1. After a very interesting conversation this morning, we felt it's very important that we dive deeper into the practice and what is happening in different markets and hear from the practitioners as they share their lessons learned, really what has worked and not worked, so that we are able to understand exactly how digital insurance is happening across Africa. So it's really my distinct honor and pleasure to facilitate this session. And I want to take you through some housekeeping. We have a session of 1.5 hours, including Q&A. This meeting is being recorded and the presentations will be available, so they should be shared. I presume you have signed in with your own email addresses, so they're on record so that you can get access to this documentation, which is quite useful. Please use the Q&A function to ask questions, and use the chat function if you have any technical issues. So those are two distinct features, so let's not mix them. I did once. So questions on the Q&A function, and then any other technical hiccups on the chat box. Good. Now, this session is really, this session's main objective is to share lessons learned on practices across Africa in some of the countries, and that will be Ghana, Kenya, Mozambique, and of course Zambia. We want to hear, really how they laid down their strategies around digital inclusive insurance, and hear what they have learned over time. So we'll focus on different products that they have put or they have introduced and tested in the market. And we shall have a maximum of 15 minutes for every panelist before we dive into the Q&A session. I want to start this session with a quote from Anthony Burgess, a comic writer that lived 1917, 1993. So he said, it's common sense to take a method or an approach or a product and try it. If it fails, admit it frankly and try another. But above all, try something. So these are people that have tried something in the market, and whether it has failed or succeeded, they want to be frank with us and share what they have learned. And that's exactly what is required for any scientific work or for practitioners that are honest with what they do in different markets. So I have a great panel today made of Valerie Labi from BIMA, Ghana. We have Jeremiah Siage, I hope I'm pronouncing it very well, from CoverApp, Kenya. And we have Tauanda Benjamim from Mozambique, working for Moderator. That's probably the kind of innovation that they brought in the market. And then we have Agnes from Madison Life, Zambia. So this team, you would guess, you would think, why did we choose them? There's an African proverb that says that when the hunter returns and is holding mushroom, and don't ask him about how his hunt went. I'll repeat, when the hunter returns home and is holding mushrooms, don't ask him about how his hunt went. So these esteemed panelists, they didn't come back with mushroom after testing different models. So, but they have the real thing. So that's why we chose them, just to make sure that they share their insights with you. So I want to give just 1 or 2 minutes for every panelist, starting with Valerie, just to introduce herself and where she's coming from before we dive into the discussion. Valerie, over to you.
Yeah, thank you so much, Jean, for the introduction, and hello everyone. It is a real honor to have this opportunity to meet you and present and discuss a little bit about inclusive insurance. So my name is Valerie Labi. I am the country manager for BIMA. I'm actually new to insurance. I actually joined the organization in November. And so one of the real motivations for me had been the last 5 years I'd spent in my life living in the northern part of Ghana, which is predominantly rural. Most people who live there are farming communities, low-income families, and it was a real interesting opportunity for me to understand what families value and understand what families need. And one of the things that really stood out for me has been how to protect your family for the future. And that's really when people ask me what I do I do insurance? What does insurance mean? BIMA, we have quite a broad model, from an airtime model, a mobile money model, and telemedicine. But really that's our focus, is how can we create products of value that people can afford, that can be scalable and protect the families of the future of families across the continent. So I'm looking forward to kind of delving in a little bit more into our model, and also learning as well from some other counterparts and interesting business models. So thank you.
Great business model, Valerie. Thank you very much. Over to you, Jeremiah.
Good afternoon, everyone. My name is Jeremiah Siage. I represent CoverApp, which is a Kenyan insurtech platform. I'm one of the co-founders and a director. Now, CoverApp is a platform that enables end users to learn about an insurance product, make their choice, choose their payment platform or payment options, and be able to get a cover in less than 5 minutes. That is, the policy documents are delivered to your inbox. So essentially, we try to make the channel frictionless. We try to make sure that the end user experience is as positive as it can get, because we're trying to change the perception of insurance. Thank you.
That's great. Thank you, Jeremiah. Tauanda.
Hello, good afternoon, everybody. My name is Tauanda Benjamim Chare, from Mozambique in Mozambique. I spent about 12 years of my life traveling around Southern Africa, just learning about insurance and how people are dealing with certain risks, until I came back to Mozambique to actually start to bring solutions towards that. So we'll be talking about one of those platforms that we've had for Mozambique, but my role mostly is to actually generate that spark that is needed in insurance in any market. So if you need somebody who can spark, I'm the matchstick that can do that in your market. Thank you.
Thank you, Tauanda. Last but not least, Agnes.
Afternoon, everyone. My name is Agnes Nyondo Chakonta. I'm the CEO for Madison Life Insurance Company in Zambia. And I wish to say that we've been in this business of microinsurance for the past 15 to 16 years. I think we have been the pioneers of microinsurance in Zambia. And over the years, we've seen it develop and grow. And we've had a lot of experiences, successful ones, and where we failed. And we're happy to be part of this forum where we can also learn on how we can take this aspect of the business forward. We've launched quite a number of products that we've been selling on the market. And as we go through my presentation, we'll be able to see what the success stories have been and where we've had challenges. So we are also happy to learn from the others, their experiences in their territories, because that way then we can be able to build each other going forward. We're very passionate about microinsurance, and we're always looking at ways as how we can grow this business line in our organization, and also how we can add value to the targeted market. Thank you.
Many thanks, Agnes, for sharing briefly about Madison and what you are doing. So without delaying you, let's just go to Valerie from BIMA Ghana. Valerie, tell us briefly about BIMA's journey in spearheading digital insurance. What is your business model in more details? I think you talked about it in your introduction. And what's your unique value proposition?
Yeah. So BIMA actually started in 2010. Ghana was their very first market. And now as a global company, we've grown into 9 markets. Southern Africa, Tanzania, and Ghana are the focus. And really for us, our focus was how could we kind of design, distribute, administer really simple, affordable, understood insurance policies and health products. So our focus has really been on understanding kind of customer values and needs, and designing products kind of at every stage of the health journey to support families. So we have a number of different products on the life insurance side. We also provide accident insurance. We have a proposition we like to call M-Health, which really looks at providing everything from telemedicine all the way to hospicash. And we're broadening our products just based on feedback. And I think to start off with, if there's anything I've learned about BIMA's journey, is to be successful in the microinsurance space, you have to be prepared to pivot your business model and listen to your customer base. At this point in time, since 2010, we have had some kind of, I would say, hit some significant milestones. So we have more than 2.5 million active customers across Ghana. We've paid claims more than 18 million. And then we've also now really ramped up our medical consultations. And our business model really focuses on distribution in partnership with the telcos, because we realize that digital distribution through both airtime and mobile money has been an accessible, understood and scalable channel.
Well, that's great as a business model. And I like the aspect around listening and to the clients and keeping your ears and eyes on the ground and be able to adapt to changes and introduce new business, products. Well, what is the current performance? Beyond the numbers, the number of people that you have already covered.
The performance for us, I like to also think about in terms of engagement. One of the difficulties in insurance is people feel that they're paying for something that they may not necessarily get value back. So when we're thinking about how we're performing, we're looking at what is our retention and how we can drive that retention by having a consistent pipeline of engagement with our customers. And I'll give an example. One of the products we launched was really focusing on what we call M-Health. And Health looks at how we can provide health information that's preventative, but health content, and a platform where people who just need health advice can access our health advice. And this is either on the phone or through an app. We also do teleconsultations. So we have a 24-hour medical service where people can actually call in and speak to a doctor, get diagnosed. And then we are now also piloting a pharmaceutical delivery model. Being able to treat people up until the stage where they actually get a diagnosis has also allowed us to support people if they get hospitalized, to provide them with a hospicash support if they get admitted. And then we also provide follow-up calls. So really, I would say that our focus on growth has really looked at not just product-based, how can we push a product into the market? The focus on growth is how can we drive an organic growth through kind of referrals and advocacy by making sure that the value we return to customers is really understood and utilized at each stage.
Yes, I like the the referral mechanism that is that's put in place. And if you were to rank like the number two or the first two or three success factors for your business model, which ones would they be?
So I would say in BIMA's story, the partnerships with the regulators has been very positive. And I think that's what really created the opportunity for our airtime model. The partnership that we have with Airtel Tigo was really kind of supported and advocated by a partnership between the BIMA and NIC, who are National Insurance Commission as regulators, positioning it as an industry opportunity for deductions through airtime. And I think that also helped, catalyze a growth in the industry, because obviously since then it's created a window for a number of microinsurance providers in Ghana and other locations to also leverage airtime. So I think that openness to innovate in partnership with the regulator is definitely something that I would say has been a success story, and it's something we don't take for granted. And as the industry adapts, as you see mobile money, as you see people use more data, as you see introductions of regulation around even data protection, I think that the partnerships with the regulator stays very key to being able to be adaptable, but also responsible in service delivery. I think one of the other things that has been a positive has really looked at product value. Often we start with a product and you try and distribute it, and you realize that you're not necessarily getting the utility. And I think this is one thing that we are very conscious of, is that we do give value back to our customers, and that if we realize that a product isn't performing, we are prepared to adapt that product to really suit the market as the market changes and understands and demands more from insurance. And so I think that it's quite an exciting opportunity in terms of it creates that environment for innovation. And I feel that if a microinsurance company is not just to scale, but to deliver quality services, that ability to be able to innovate, diversify our offerings, and establish partnerships so that the product is really valued, is something that really has driven successes.
That's great, really. And I think from this morning session, clearly partnerships are key. But also the value proposition that we deliver to the customer is quite important for us to survive and make the business models sustainable. Would you probably point out to the to what has not worked? You felt this really is hindering in a way your business model, and you feel it's something that keeps you awake during the night?
I would say that there are kind of four main areas of risk or challenges as a business scale. One of them is around trust. Obviously, I mentioned that our business model has a very significant element of leveraging telcos, not just airtime, but mobile money. So intrinsically, our industry is also tied to the security and public perception of the safety of mobile money platforms. So I think that's one thing that as that business model develops, it's going to be more and more important for microinsurance companies to also support in the advocacy of increased security and understanding of mobile money, to make sure that we also join the telcos and data protection agencies in the fight for people who are not using mobile money platforms to a way that's actually enabling people to engage more in financial services. So I think that's something that as we grow and as the space kind of adapts, we have to be more conscious of. I think the other thing is around kind of usability. So it's great to be able to say that we sell microinsurance nationally, but from an operational perspective, that comes with a number of challenges, language being one of them. So to be able to staff up for the right resource, right language, for all the engagement tools, if you're using SMS, if you're using digital channels, how are you actually translating that so the context is relatable to all breadths of people within the country. And I think just in terms of quality assurance, the more diverse the product base becomes, the more we've also had to see that we are very, very strong on the quality assurance, calling customers back to make sure that they understand what has been sold to them, adapting the language of our marketing materials to make sure that our products are understood, and then also being a tough organization if we see that people aren't adhering to the standards that we need to be able to deliver quality to our customers. I would say the other area that has been a challenge has just been around tech stability. Obviously this year with COVID and working from home, the businesses had to adapt a lot. You know, we have a call center of around 200 sales associates who we had to move to work from home. So just the infrastructure ecosystem that supports us to do business, do we have consistent power? You know, do our sales associates, do they have power at home? Do they have access to good quality internet? How do we also make sure that we have protection around our data security? So from a logistics perspective, just the stability of everyday infrastructure has a huge implication on the quality of business, but also our ability to grow and our ability to serve customers. In addition, just systems redundancies, I think we mentioned partnerships. Partnerships are important, but the stability of your partner platforms are also just as important. If you're looking at, let's say, payment aggregators, when even something as simple as when they do tech changes to their platform could actually impact your ability to deduct from your customers and customer experience. So being very conscious of that. And then really just scalability. And scalability looks at the level of investment or the cost to scale, but also as you scale, having that ability to still be adaptable. So there's an opportunity cost of how agile your business is. And I think sometimes people can negate that because they feel that they'll be the same business today as they would be in 10 years' time. But I think if you plan for that change and plan for that adaptability, then it's something that wouldn't necessarily be a pitfall. And I think that we as a business have had to really leverage a lot of data, go through a lot of changes and adaptation just to make sure that we're still responsive as we grow.
Interesting. I mean, remaining agile as you scale up. I mean, it's a paradox that is always there. And I mean, now my last question to you, Valerie, we have seen some development in the telco industry, where, for instance, here in Kigali, MTN is removing, kind of giving or setting aside the subsidiary on mobile money so that it's separate and they focus on that. How do you see the future of your business model based on these dynamics in different markets and with the fact that your business model is based on partnerships? So if they are moving like that, what do you think would happen next?
Well, I think from an opportunity perspective, it's great to see that there are so many potential partners in the market. And the thing about partnerships is making sure that every partner will also grow and adapt, but the values that they use to make decisions, are they aligned with the values of your organization? And so I think that that's become very important. You see it when you see mergers and acquisitions, that the values of the two organizations that came together didn't match. So at one point they diverge. And I think that's really what's interesting for us has been to establish partners with people who have similar values, to create a really clear dialogue so that when one business is making a business decision, there is an opportunity to have that kind of back and forth to understand what are the implications for all partners. But I think one of the things that's really going to be interesting as people diversify away from, let's say, just the dependency on telco partnerships, is also what are the other digital platforms that are popping up that could support with lead generation, that could support with improving the understanding of product, that could be partners to add value to insurance services. And so I think that if I'm looking at the future of kind of microinsurance, is really how to make microinsurance value more holistic and central in people's day-to-day life through having partnerships that meet people's needs in the digital space. And that's going to come with some things, some kind of innovations that we haven't even seen yet. But the openness to be prepared to pilot, I think is going to be really important, because we've got to the stage where the telcos opened their platforms to be prepared to pilot with kind of value-added service providers. I think we'll also get to the stage where that same ask will come of some micro-insurance companies, particularly those of us who are focused on reaching underserved populations.
Yeah, that's great, really, because I mean, as their business models evolve, I mean MNOs, there's something that they are keeping, which is quite important for insurtechs or any other fintechs, which is really keeping an open finance policy with open APIs that can still be used by different innovators. So I think they are fully aware of the value proposition that institutions like yours do bring on the table, and I presume that will continue. Collaboration, I think, is better than probably, or competition is better than competition going forward. So thank you very much, Valerie, for the insight. I learned a lot about BIMA and your plans.
That's great.
So let's go to Jeremiah. Please share your insights. I know you have a PPT, and then we can go to the Q&A thereafter. Thank you.
Thank you. Thank you very much. Right. So thanks a lot. First of all, I'd like to thank you for this opportunity to share our story, the story of CoverApp. To use your words, yes, we went hunting, we are back. I'm not sure we are holding the antelope, but again, we are not holding the mushroom. So we probably are holding a rabbit in some way. Right. So CoverApp, as we introduced it earlier, is an insurtech platform that enables customers to interact with insurance in a little bit more of a better way, more comfortable at their own pace, when they want, where they want. Basically, we are giving the power to the consumer. It's riding on the fact that most consumers now are consuming other financial services on the phone, and therefore we have an app, but we also have a web app. So those who would like to be a bit more sophisticated and use the computers, they're still welcome. So ours is to provide affordable insurance on the go to those who need it most. And who are these who need it most? I think this is where the inclusive insurance customers come in. We think they need that insurance cover much more than a lot of people who may already be having insurance, right? So the environment that we're operating in, which is what really shaped our thinking, what informed our decision to come up with CoverApp, is characterized by a huge number of people who don't have insurance at all. 71% of the people have not interacted, have not thought of, have not enjoyed the benefits of insurance at all. And if you look at the overall economy and you look at the number of, the amount of premium that is paid versus our GDP, then you will find that that figure is even much smaller than what we are showing here. It's less than 3%. So we have people who are actually complaining of products that they don't like because they're too complex, complicated processes, products. We have people who don't trust the industry. They don't trust the players. They believe they can pay a premium, but when it comes to settling a claim, then they're given stories or they're given a runaround. So they actually think that insurance is something they don't need or something they don't like. And then we also have a lot of good solutions, but they're not aligned to the needs of the customers. So we've seen a lot of products that are actually very good, but they're actually addressing a different problem from what the market is actually concerned about. So these are the things that we saw as an opportunity for us to act on and actually come up with a bit of a solution, right? So our strategy at a glance, and this is just a glimpse of our strategy. We've got customers on one side and we've got the underwriters on the other hand. So we sit in between. Now, we are an intermediary. We operate as an intermediary. And let me just start by unpacking that. We went around trying to seek what kind of partnerships we could have with insurance companies. And we decided this is probably the path with the least resistance because insurance companies, the underwriters already understand the relationship with brokers and agents and people who help them sell. So that was the first barrier we needed to jump. And the best way was to have a relationship with the industry as people who help them sell as an intermediary. The second thing was we then looked at the products that they have. And because we cannot underwrite, we decided, look, some of them had good products that we could sell digitally, others did not. And some products were outright misaligned. So we decided to work with them, but we also work with them to improve the products that they have. And indeed, there are products that we developed on our own and then found an underwriter for them. And therefore, it is still being underwritten by someone in the industry, but the whole idea and the whole design came from us. And then we also have technology. So we also provide some services to them, which are actually technology in nature. We've got partners who then put their products on our platform, but we also have partners who are asking us for the platform because they want to now have a platform like ours, but they want to run it on their own. So that is also open. So those three define our relationships with the underwriters. If you go to the consumer side or the customer side, we are giving them convenient channels. We have a web app, we have a mobile app. We also give them appropriate products informed by research. We go around, we try it as much as possible not to design products in the boardroom without the customer being in the room. So we go out, find out what is really important to the customers. So we get that information. And then of course, we are very, very strong, very, very focused on user experience. So we want to make sure that, yes, you found a good product. Yes, you can pay for it, but what is the overall experience? And for us, experience starts from the first time you encounter this product all the way to the time when a claim is settled. And a lot of our issues have been around the user experience. We try to make sure that that experience is as good and as positive as possible. Okay. So just a brief on the platform. We are going just a little bit deeper. Again, I won't bore you with too much detail because I know not everybody is able to experience it right now. Those who can download it and actually experience it for themselves. So we have a solution for everyone. It's a simple, we try to make sure that any product on our platform is simple enough for people to understand, make a decision on, and you can buy it quickly. Get that experience that is immediate, instantly get your policy documents delivered to your inbox, and you complete that story at that point. We are also working very hard on the distribution. We get our customers through the digital channels, but we've also got a human touch added to the digital channels, because we know digital alone won't work. So we have an outlet which we have set up where people can actually come and complete that digital process. Sometimes it is guided by a person, and we have realized that in this part of the world, sometimes when you're discussing a complex issue or a subject that's sensitive as insurance, people don't just want to deal with platforms and the gadgets. Sometimes a human being somewhere needs to tell you, look, okay, you've clicked this, okay, what do you see? And now click the next one. It's all right, it won't blow up. This is what's going to happen. Okay, now you have this, now you can pay. You got confirmation, okay, check your inbox. Now you have your policy document, you're covered. So that kind of experience delivers a lot of reassurance to the customers. We want to build trust, right? In this part of the world, I guess probably the world over, it has been believed that insurance must be sold. We want to try and change that. It's probably a huge task, but we are trying our best to make sure that we can sell without coercing anyone, without people feeling compelled to buy things or sign up for products that they don't fully understand, sometimes even products that they don't like. So we use simple language. We try to avoid the complicated jargon. We want them to feel informed, and we want them to make a decision to buy when they're confident about what they're buying. All this because we're trying to change the perception. We want people to realize that insurance is not that complex. It's not that time consuming. It's not that painful. It can actually happen as conveniently as people consume other digital financial services, right? Our business model, of course, the first one, as we said, the agency module. We are an agency, so we are paid commissions. And that defines the relationship with our underwriters. But we also have a white label arrangement, in which case we can give the software, we can give the platform in a white label form for underwriters and indeed other intermediaries who may want to operate like we do. We give them that platform and they can actually use it. You may not know that it is actually our platform they're running, but we've got such discussions as well. And then we've got our shops. Now, one would wonder why a digital platform would want to have a shop, but we know that in this part of the world, it is necessary. We have experienced the importance of that human touch. We are digital, yes. Even at the shop, there are still no papers, there are no forms, but when you go to the shop, you will get someone who will help you complete the digital process in a lot more humane nature. Okay, so what have we been able to do so far? Again, I want to say we are holding a rabbit. We haven't caught the antelope yet. We've got 6 insurance and risk partners already signed up. We've got lots more that in the process. We are discussing, trying to refine the agreement. And then we've got the main platforms. And the main thing about our platforms is they're fully owned by us. Our mobile app, our web app, all the support is done internally. We had to make sure that this is done internally because the agility that is required, the timelines, the delivery, the quality that is required is difficult to achieve if you're dealing with a third party. That was our experience. We've got 6 products on the platform. And more coming. But again, these 6 products are not all insurance products. There's something I want to say about our story. We realize that people want to experience the product. Again, for people to believe insurance, the tangibility of insurance is many times an issue. And many times people only experience insurance when a bad thing has happened, when a disaster has happened, they've incurred a loss, or they've something has been destroyed or they are sick or something. So we decided to bring products that are insurance-like, but not quite insurance, to increase the possibilities and the experience, the possibilities of experiencing the benefit of a cover. For example, in addition to having, say, motor vehicle insurance on our platform, we also have a road rescue service, auto recovery. Now, that happens more frequently than accidents do, and therefore customers have a chance to experience the benefit of having a cover before, a crash or the loss of a car. So they have things that are more lifestyle in nature, brings them back to the platform. They then experience and believe us even more that it is easy. For example, you wake up one morning and the car battery has gone flat. You can actually call someone through the app and you will get help. It's a much, it confirms that the cover works, but it's a much less disastrous experience than, say, if you had an accident. So we are trying to build that kind of perception. We have now opened a shop. There's a second one coming up soon, because the first one has actually shown us that when people assist digital, the experience is much better and the results are much stronger. We've got about 5,000 users on the platform, and these 5,000 users are people that we try to engage with as much as we can, because we are still learning. We keep talking to them, we get their feedback, and even as we serve them, we try to make sure that their claims are settled, or if there is any claim. Okay, so what are the challenges? We've experienced a few challenges. I'll start with one: partnership. We've had challenges with some underwriters. We've got challenges with some technology providers, and that has informed a lot of what we currently do. For example, we realized that we had to take charge of the technology aspect, and that's why we decided to build an in-house team that can look after the technology to give us the agility and give us the flexibility that we need to serve this market correctly. We've also had some challenges with underwriters because, as you all know, most underwriters were not designed for inclusive insurance. And therefore, sometimes when we are calling incessantly about a $10 worth of a claim, they sometimes wonder why we are pushing so hard for such a small item. But to us, it is important, because for the customer who bought an option that can be compensated for that small amount of money, it is important. It might mean the difference between them getting back to doing their business or not. It might mean the difference between them working and making an income or not. So we try to make sure that all claims are treated equally and they're settled as quickly as possible. But sometimes some things are out of our hands, and therefore it is a challenge. We are not an underwriter and we have to work with the partners. Consumer education is key. And we are in an environment where a lot of people are not aware even that certain insurance types exist. And therefore, there has to be a lot of investment in getting them to know that it exists before you even sell the product to them, just getting them to appreciate that things can happen, but there's a way of taking care of such risks. So we try to also bring it down, and through our sister company, we've developed some other tools that we are using for developing, for pushing consumer education. We've had challenges like most young companies, funding. We don't have deep pockets, and therefore we don't have enough money to do everything we need to do. It has been a challenge to secure marketing funds, for example, and that's why we are scaling up, but we're not scaling up as rapidly as we would like to. And the last challenge I'd like to point out is, the technology landscape. When we started CoverApp, the best technology was at a certain level. Now things have changed and there are new requirements, and you need to think about data protection, and you need to think about, security issues. So we've had to look at all these and try to manage this and still keep the experience positive, even as we look for more funds. So technology is great, but it also comes with its own challenges. Great. So what are the key things that we've learned? And I just want to start with communication, engagement with the customers. It is key. It's very, very important. We have to keep listening to the customers. And indeed, we have learned a lot from our customers because they have an opinion. They have what they like. They've got what they appreciate. So engaging and talking to them constantly is very important. In fact, that has helped us even get back some customers who may have dropped off, but because we are engaging, we've been able to retain them. And the second one is control. We would advise anybody to be in charge of their technology, whether it is outsourced or not. You need to be in charge of that technology so that you can maintain, the standards, the quality that you want, and you can deliver. You can also keep your word, because many times this is where that ball is dropped. The priorities may not be aligned, and therefore your technology provider may not deliver as well as you expect them to. So it's one area where we realize that control is very, very important. And then number 3, the partnership risks. I think these have to be managed right from the beginning. You have to make sure that you've agreed with your partners, especially in this case, the underwriters. And if the priorities are not aligned, then probably that's not the best kind of partnership. You need to be sure that those risks are taken care of right at the beginning. And then a big lesson we've learned about tech, as I mentioned before, is that tech alone will not do. It's not enough for inclusive insurance. We're in a sector where there's still going to be a requirement for some human touch. It has to be supported. Tech alone, people will learn about the product. Yes, they're digital. Yes, they look at it. A few people will download the app and sign up, may ask you questions through the platform. But we've realized that it is a lot stronger when there's a human being somewhere, either through a call center, someone who calls them and talks to them, or someone who actually meets them and gives them that warm touch. We think for inclusive insurance, that is still very important in this part of the world. And of course, the last one is funds don't come easy. So if you're young, like we are, you have to maintain a very lean and efficient structure so that you can balance your expenditure with the little income you're having and still keep moving as you look for skill, right? So what we see in the next 5 years, 4 main things. Number 1, we expect to see simpler products, simpler than what we've seen before. There would be a lot of demand-driven products, short-term products, and there should be, we expect that we'll have a lot more products being easily onboarded through a digital platform. We will also have automated claims processes. We already have seen this to some extent. For example, on our platform, customers can actually initiate, a claim. If there is a claim, they start right from the platform. If they need photos, they can take pictures right from the platform. The claim form is automated. It is a digital form that they do right on the platform. So we expect to see more of these, and we expect even to see better technology supporting the claims process. InsurTech will be mainstreamed. We will have underwriters who are partnering with people like us a lot more closely because they will be seeing the value. We will also have some insurance companies, in our view, probably acquiring companies like ours because they will see the value of the technology, but they probably would not be willing to start from scratch, and therefore they would want to go for something that is ready. The third thing we expect to see is digital customers. They are increasing, and a lot of them will prefer digital channels. We've seen this in other sectors. A lot of the banks in Kenya today will tell you that they do more transactions through the digital channels, way more transactions than they have in the banking hall. And we see no reason why the insurance company customers will keep going to the insurance company's offices to fill forms and queue. So the digital consumers are going to drive this change, and customer feedback will shape the processes and products. People are more vocal and they are more demanding. The customers will basically technically be advising companies on what works and what does not work. It's because if you don't listen to them, then they'll simply move on to the other option. And the last thing that we would also expect to see in the next 5 years is very rapid growth in inclusive insurance. We think that more and more people will start appreciating, and that's where digital inclusive insurance products will actually be seen to come to life, because people will start appreciating the simplicity and the convenience that comes with them. There will be new inclusive insurance players. We imagine that some non-insurance players right now will actually become or acquire insurance companies. We think some telcos will actually join this space very actively, and other people from elsewhere. Insurtechs may get licenses to start offering the cover. We've already seen examples. So this we think is going to increase. And then, of course, for the traditional players, it's not a warning, but I think they will adapt or partner with inclusive insurance players, or they will have to cede some ground, that is in terms of market share, because I think the growth is going to be driven differently from what we've seen before. Right? Thank you very much.
Yes, thank you, Jeremiah. That was brilliant. Very good insights indeed. And I'm so hard to summarize because every word is carrying a lot of weight in terms of how this model is spearheaded, and how the insurance, the inclusive insurance would be driven by the digital platforms. Probably just, one question that came to my mind as you were presenting and concluding. This morning we heard from Richard. He started with MicroInsure as an insurtech, and then recently they have grown into a microinsurance or an inclusive insurance company. Do you see this being probably kind of a way of adapting to or really responding to the challenges that insurtechs are having now? Because you talked about frustrations, throughout these partnerships, it's quite not easy. Do you feel like that would be a path for some of the insurtechs going forward?
I think it's very likely that will happen. And again, we know the landscape is also changing. For example, in Kenya, we've got a progressive regulator who has already allowed, for micro insurance organizations. And I think the bar or the requirement in terms of investment is much lower, and therefore it is not far-fetched. It is very likely that some insurtechs will actually become insurance companies.
Mm-hmm. That's good to hear. I think different markets, in addition to Kenya, even Rwanda, we have a specific regulation for microinsurance, and already we have one insurer that has set up a separate subsidiary that is covering just micro insurance products. That's quite interesting. My final question, to you, you've talked about adoption really by different underwriters, and I wanted to ask about adoption. Did you see any adoption in the market, really, like underwriters emulating your offer? Investing in apps like yours and trying to adapt to the market dynamics?
I think it is happening because the need is there, but happening at different scales and in different forms. There are many players who are trying to set up their own. There are underwriters who are partnering. There are also underwriters who are thinking about, just acquiring their own technology, which they can all control. So it is happening in different forms and shapes, but it is happening. they're realizing that, the traditional way of carrying out the business of insurance may not take them to the next level. Many of them are seeking ways of getting growth from new kinds of customers. And I think this is where, the efficiencies that come with a digital distribution channel, for example, is looking very attractive to them, but they may not have the capability or the patience to develop it from scratch. And therefore they could easily, get them in, or get something that has been developed and bring it in-house and then hit the market quicker.
That's correct. Thank you very much, Jeremiah. That was insightful. So let's move to Tauanda. We are running a bit late, so I request that you mainly focus on the business model and what you have learned, so that we have an opportunity for people to ask questions. I think already I see so many questions in the Q&A box. Please, Jeremiah and Valerie, you can start probably responding to some of the questions there as we continue. Thank you.
Okay, good afternoon, everybody. My name is Tauanda. I'm representing Movoke in Mozambique. Okay. Movoke is an insurance technology platform that allows access to different distributors, partners, in order to distribute insurance. So since I'm going to be focusing on the business model side of it, I'll take you to this jungle that I always like to share. So what we do at Movoke is we make sure that the market, we've created the possibility for different insurers to access the customers that they want. So one of the ways that we do that is through like the normal, connecting with MNOs. And so far we're proud to say that we are already integrating with all the 3 MNOs in Mozambique. And our integration is not only for the payment side or just for access side, but our integration is actually coming in and using the whole entire MNO division or all MNO services to distribute insurance. From there, we also have to make sure that all the regulators are in place and they can actually have a panel view of what we're doing in the system so that they can accept the technology and the products that each insurer is bringing in. So we lay out that platform for everybody to be able to visualize. And then we drew down the distribution channels according to what the underwriter or the insurer or any partner wants. That is through any agents that you feel like you want to distribute with, or some that we have already done research with. But I would like to focus mostly on what we are using right now, and it is underwritten by NBC, which is the first microinsurer in Mozambique, and so far the only, and others are still coming in. So what we did is we integrated with M-Pesa and Vodacom, integrated with Movitel and Imola, so that they can distribute their funeral and food insurance products in the market. People can access it using their telephone, wherever they are, with that depending on the internet. But one of the aspects that we opened up for them is to be able to distribute in retail and departmental stores, and also the ability to distribute this to medical facilities and funeral agencies. So far, what has been implemented is with funeral agencies, and medical facilities is underway. So in order to do this, we realized that in microinsurance, we have a microinsurer that can distribute various products, which sometimes does not remove the element of what is normal traditional insurance. By bringing technology into it is just to try to make a chunk of the market come to them and also gain more traction and visibility. But what we realized with our current partners is that the idea is not only to be a microinsurer that distributes many products, but the idea is to use digital means to even go in niche micros. So from a microinsurer, they want to go into a niche micro kind of strategy where they focus with a particular technology on a particular product and deliver it nicely and I can say to the standards that the client is expected to receive that product. So instead of just giving the market the whole entire products in one platform, the idea that they have at the back end is to manage each niche according to its needs. So how they do it and how we find success in what we do. We use this value chain, I can say linear value chain to access and assess what we are doing. So we start from the product development until we go to during and after claim services. And each of these stages, we look at what are some of the values that we can create with the technology that we have at the moment. When you're doing development, we're looking at how can we quickly go and iterate in terms of what clients want, and that's where we involve the HCD design. So that's one part that can be implemented in your business model, how to quickly go in the market, how to quickly change without besting on with the whole product to the market. Then also look at how can we reduce the cost for all our stakeholders, that is the underwriters and also the clients and also the distribution channels. How can we reduce the cost of acquiring one client? And by doing that, the technology has to save that by making channels that can induce trial and also offer support to the client and all the stakeholders that are there. And then when you come to premium collection, we make sure that the collection fees are discussed.
Excuse me. Yes. The slides are not moving. Just make sure they're moving. Thank you.
Okay. Let me see what's happening. Are they moving right now? Can somebody confirm?
No, I think you can do a slideshow or full screen and then we see. Yes, they are moving now.
All right. Okay, so now you're at the digital inclusivity lessons, right?
That's correct. Yes, correct. Thank you.
Okay, so, all right. So what happens is, okay, where was I? Okay, collection fees. We make sure that the collection fees that everybody is accessing are standardized to make sure that the technology stays relevant among the various partners. This is where there's a lot of conflict, because if you have a partner that is coming in and different partners that are coming into your platform and you have different collection fees from different aggregators, it might be difficult for you to manage them in terms of the collection fees, in terms of premiums, and in terms of difference in offering your value. So by making sure that we negotiate the collection fee from aggregators, that's the first thing, without having to go to develop our own payment platform, but we make sure that we use what already is in the market. Then we also remove the integration complexity. That is one of the things that is needed in the business model. As you saw in the first slide, there's a lot of things that need to come into it, but if you remove that with technology, it becomes easier. And I think if there's something that is called C2B to B to B to C, is something that we try to do, so that we make sure that when there's a customer coming from different angles, either it's coming from a business side, from a consumer side, but the end result goes to the consumer, how can we make sure that the technology offers value along this chain? Then what does the client need in terms of the value that we are creating? That is where we look at the intrinsic value that we need to create with the technology that we need, so that we actually bring sustenance in what the customer expects and needs from our solution. So that's one of the areas that we look at. And then how do we pay the claim? What is it that they need for the claim to include? Is it cash? Do they need to have it as cash, as money from your agency? Do they need to have it from the ATM, from their bank account? Is it mobile money? Is there somebody who can give it through an organization, or they need other forms of claims or benefits, which are not in terms of monetary value, but they are instrumental to them. So those are some of the things that we look into the technology, so that can it deliver those things with the technology. Then the last thing is during and after claims, where you do the period of claims. How can our technology give claims fastly, rapidly, and responding to the needs of the person? Let's say a person has died, as Richard was saying, and they need a funeral cover. If you give it in 48 hours, yet the burial is done in 2 days or in 2.5 days, that means you are delaying what they are paying for. So it's better to give it in 8 hours, better to give it in 5 hours. Why not give it in 1 hour if you can do that? So that's one of the things that our technology is able to do. I just wanted also, I believe everybody can see this, I just wanted also to bring specific stories so that people can see what happens when we start bringing technology. When you look at this patient story that I just tried to lay out, is looking at a person in terms of how can they come and buy insurance without them thinking about insurance when they woke up. So a person can go doing their normal grocery, doing their normal purchasing, but as they go to the till and they hear that there's insurance, they might be able to decide to buy it, and then you can process the insurance digitally, and it reaches to the insurer. But what are the costs that are involved in this? These are the costs that may actually make this person not to actually go and acquire insurance because of the costs that they incur. Because where is the technology starting? So we need to understand that, is it that you need this technology to start from where you can get it or from where you are? So those are some of the things that we try to answer on our value chain analysis. I'm just running through this because of time. So what do I see to be the future of insurance? I think I have the same view as to the one of Jeremiah and also Agnes, where we are looking at how can we rapidly go into the market, and how can we expand and exhaust the markets and the unserved markets and the markets that we have already. And we're also looking at integrated businesses. They're talking about acquiring of some business, some insurtechs, or also integration between insurtechs and MNOs and insurance becoming one business, integration of a merchant line with the insurtech, and then the insurer comes, or maybe they take that, e-commerce sites that are coming in. A lot of there's robotics, there's AI that is coming in. So this brings more integrated businesses. But when we have this on our side as insurance service providers, what do we do to the other side that is not in our jungle? That's why we need to have solutions to plug and play easily for these people to be able to connect to us. So the other things that will come in, there will be a lot of interconnections that will come, a lot of development on APIs. There's going to be a lot of exception on user experience. What is the speed? How can we deliver customer care? What are our learning curves in terms of that? Then the regulator will need us to comply, and there's a lot of compliance that will come in as the regulator become more educated in technology, because most of the regulators are met to regulate technology as it comes. So at the time that they are very confident about what they can regulate, we'll see them coming in also and needing to take a view on what we are doing. And also there's going to be a lot of scalability, but this can be horizontal and vertical. Right now, we already have horizontal scalability happening in Mozambique, but we believe that in the near future, a more vertical kind of scale is going to start happening when we start introducing new products, because right now we're just bringing like vast kind of products where we're just adding value to already what we have and what is known. But we're going to start to have different kinds of insurances. When I talk about this, it's like in Africa, we might not be thinking about it, but electric vehicles are coming. Those things will start to need different kind of insurance. And if you're an insurer and you do not have technology, how will you be able to insure cars if people start buying electric managed or automated cars? So those are some of the areas that are coming in with technology and that we are looking into. This is where I end my quick presentation so that I can leave room for others. Thank you so much.
Thank you very much, Tauanda. I think that was very insightful, and thank you for, doing that in very few minutes. Only a question from me is, and I encourage the participants to write their questions right down in the Q&A. Already Valerie and Jeremiah responding. Thank you very much. So type your question there, and Tauanda will be also responding. My only question here is about data analytics. How have you, how are you managing data, and how are you using data analytics to inform adaptability of your products to needs of customers over time?
Okay, that's to me. So in terms of data, what we do is, okay, there's something that I did not mention. Right now, as we are in our system, I can call it a platform or system. We know where the person stays. That's the first thing. We know what TV station the person watches and what radio station they watch. We know where do they normally buy or purchase their products. So when we have such kind of data, we're able to direct the client towards the payment or the purchasing point that they will need to acquire their insurance. And the second thing is to, when we have the data as insurers, we're trying to make sure that we direct people or clients to where they can get their claim. Because at the end of the day, the question that is in these clients is, how do I get my claim? I might pay, but how do I get my claim? So we are using this data to manage how they'll be able to actually have the idea on where they're going to get their claim and how is it going to be processed. I think we have one client that claimed and said, you know, I didn't even read your terms and conditions because this was too simple and I knew what to do. And the way you directed me, I had never come to your offices, but by the time that I came here, I knew what exactly that you needed. And we delivered their claim in a matter of 8 hours. So that is how we are managing the data and making sure that we're not controlling it, but we are making it useful for them in the future.
That's fantastic. Thank you. So, Agnes, would you take us through your offering and kindly be brief so that we have time for a few questions? Over to you. Are you there, Agnes? Can you hear me? You on mute? Please unmute. Yes.
Yes, please. No, I'm just trying to share my screen.
That's great. Thank you.
Okay, let me go there. No, it's okay now. So I come up here. I've done that before. Max Live. No, don't do that. Max Live. Full screen. Oh, the other one. No, then share. So do I come on? Let me leave.
Hello, Agnes. Can I help? I can't hear you. I think we have lost Agnes. She's trying to connect, but so let me see how she comes back. Apologies. So in the meantime, probably we can be responding to the questions. I think most of them have been responded to. And thank you, Valerie and Jeremiah. Any questions to Tauanda?
Hello. While to wait for Valerie,
Yes.
for Agnes. Here, I think when it comes to fraud handling, that's where most people would like to understand, like, how would you handle your fraud? How would you handle fraud cases? I think in most sessions that have been spoken about, when you're designing a product, one of the things that you need to cater for is fraud from a financial perspective, so that at least you not be able to, because when you're developing your product and you're looking at all the means to deter fraud, you might actually end up just developing to deter fraud. You should also allow the flexibility to learn from the kind of fraud that may come, because your system has to adapt and you yourself has to adapt. But the idea is you always have to develop and mitigate as they come, because some of them you'll not even be alluded to until they happen. So I think when it comes to fraud, it's a process that it is not done in the office while it's developing, but there are some kind of checks that can be put in place to avoid specific general things upon learning that you've had as an insurer, but the rest will be learned along the line. So a proper answer will be fraud is something that can actually be learned and something that you can resolve. It's just like cyber attacks. You always have an antivirus, but then sometimes they attack you. Sometimes you have different dedicated networks to avoid that. But people always find ways to come and purify in your systems. So you always have ways, to learn as they go. I think that's the best way I can answer that as well. Somebody asked that one.
Yeah, that's great, Tauanda. Thank you. Probably another question as Agnes comes back is about, everyone was talking about a combination of high touch and light touch, or low touch really, for customer onboarding, but also customer handling. Should we say that really digital platforms or channels supported with call centers are not enough? Is there any resistance to change? And how do you see this issue vis-a-vis customer segmentation? I mean, is it probably the older generation that wants light touch combined with high touch, or is it something different for the youth? So I just wanted to hear, because I mean, it looks like it's very important that we combine a high and light touch. How did you see this in your different markets, so anyone can come in?
Thank you, Iyacu. I think that the combination of low touch and high touch is something that we've realized, and it's because, one, the kind of people that you're dealing with, they're people who will take a very long time before they're fully comfortable with technology, and therefore, if you expect them to go end to end on a platform, you may lose them somewhere along the way. And then we lose the whole purpose for which we are doing all this. We want to get everyone included. We don't want to exclude them just because they're not comfortable with technology. But the other part of it is there is some value which even those who are comfortable with technology would tend to appreciate. Many times even a phone call from a real human being who can interact with you, or if you mimic it in some way through the chat boards and everything, people feel that they're getting responded to. They're not just talking into a machine or basically putting their issues onto a machine and not getting a response. So I think part of it is human nature. We like responses, and sometimes the best kind of response you'd get comes from another human being in one way or another. Even if it's an email, you want a quick response. If it's a chat, you want somebody to respond to you. If it's a request you put on a platform, you want it immediately, and you want to feel that someone has actually processed your request and given you an appropriate answer. And therefore, we're in a place where, yes, technology is there, but technology is not going to take over our lives entirely, not in one generation. It's changing slowly. Certain things can go completely digital, we know, but certain things will take some time. And I think insurance is one of those things that will take a bit of time before people can completely do it only on the platforms. Thank you.
Yeah, I think just adding to that, one of the things that we've learned is also about having these different customer journeys, depending on where you are in that kind of engagement ladder, may also speak to a different need in how we as an organization engage with you. So I think there's different sorts of, is it curiosity? Are you on onboarding stage, or are you at, more of an advocacy stage? And I think just depending on where your customer is in that engagement with your brand may also speak to the level of high or low touch that they need. I think that we've also seen for people who are continuous advocates who continue to refer us, those are also people that we look to engage with more, just because they have value from our brand, and they also can add value to other people by just referring. I think one of the other things that Jeremiah mentioned was just around responsiveness. I think regardless of where you are on that engagement ladder, one of the important things is to make sure that the channels that you use to reach out to your customers, or your customers use to reach out to you, are extremely responsive. And that can help also balance whether the engagement needs to be digital or in person. It's just to make sure that there's consistent feedback and engagement with customers. So I think it's definitely a balance, and as organizations grow, to be able to diversify those onboarding journeys and identify where in the engagement ladder customers are, would also allow people to diversify where they invest in a more heavy and maybe even in-person engagement.
Oh, that's great. Thank you very much. Another question that came in is from someone anonymous. How many subscriptions Movocare managed to secure? It's to you, Tauanda.
Movocare is now running around 10,000 subscriptions, and we have right, in terms of that, we have different active regions. So in terms of our active regions, they're running around 1,500. So now we are in the process of conversion, because the first thing was the first initial tech where people are like, what is this? And they register. And then you start now going through everybody, and then you start realizing what are the different capabilities of each client, changing their packages as well, like from one that is a higher to a lower, because they just got that excitement, but they didn't really understand to the detail. So you start talking to them so that they can understand the way they can fit. So right now we are in that phase, and also we are trying to limit because of other things that we are doing at the back end, because we're creating more platforms for people to actually be assisted in registering than just to come in on board themselves, but also creating other platforms. So we are sitting at 10,000, I can say.
Thank you for clarifying that, Tauanda. Another question to the panelists. Henrik from Mozambique. Traditional and non-traditional insurance companies are exposed to risk, and actually insurance is all about risk management and mitigation. Would you like to, he would, or yes, I think, yes, would like to hear the thoughts of the invited speakers about 3 lines of defense approach versus inclusive insurance operational risk management. Anyone to answer? Valerie, let me pick up on you. Any line of defense for inclusive insurance, operational risk management? And I think there's that tendency, to fear that when you are dealing with the mass market using technology, then you are exposed to more risk as compared to the traditional segment. So
yeah, I think for us, I think I mentioned earlier in terms of service delivery, one thing that we've had to learn has been to back up every product and distribution line with a quality assurance element. And so it is a cost, it is an investment that needs to be planned for, but it has helped us kind of manage the operational risk in a number of different elements, from, sales, mis-selling, to, getting feedback from customers if there's delayed claims. It's really helped us make sure that people even understand our product and how they're articulating their product to people. That onboarding is important. So I think it's a risk with every business, but I think the good thing about really investing in the kind of quality assurance space, even as much as calling back customers when they've joined your service to make sure that they're really sure of what it is that they're buying, those investments pay off. So it's about being proactive in identifying what the risks are and investing in that mitigation, not just waiting to be reactive.
yes, thank you very much. Someone wanted to ask, Tauanda?
Yeah, in terms of operational risk, also in terms of technology-wise, because everything falls into your system, everything is backed up into your system, and you need to control maybe your sales team, your different distribution channels. One of the things that I've seen in some of the solutions that are already in the market, we went and tested, like, okay, I want to buy this insurance, when you're doing a competitive search. And the person say, if you want to buy electricity or airtime, I can sell you. But when you start talking about insurance, I don't even know how to operate this to sell you. So that shows that at the back end, something is not happening as it should be. But if you really want to manage risk in terms of how you're selling and people are not selling as they are, the first thing is you have to be able to first train people naturally so that they can know what they're doing. Because if people don't know what they're doing, you have the risk that the technology won't even serve the people as they're supposed to be. And the second thing is, inside your systems or your operations, there are supposed to be certain checks, as Valerie was saying. There's supposed to be checks where somebody has to go over and check what everybody was doing. Just like call control, just like you have your feedback messages, just like you have your internal discussions in terms of what happened during the day and how did everybody manage to solve everything. How was a claim done? You have to sit down, because at the end of the day, yes, it happens digitally, but you have to sit down and look at everything as it happened. So digitally, everything can happen and you have to have checks on point, but also you have to sit down and follow up and train your distribution channels, not just give them the tech solution, but they need to be trained and followed up.
That's great. Thank you very much, Tauanda. Rahab mentioned about technology, the role of technology in improving customer experience, and really she was pointing out to easier product comparison between different underwriters. I don't know. I know. Jeremiah has responded, but we wanted to understand in different markets. Do you have such kind of technology providers that really can provide that comparison between offerings from different underwriters for more customer experience, or for them to choose from, and they have better experience? So anyone who has probably exposure to that will share.
Hello. I'll speak from another area, not from Mozambique perspective, but another region I was in. So yes, the switching in insurance naturally doesn't happen most often because of the terms of the insurer. But when it comes to microinsurance, what you've noted is the switching only happen most of the time. It used to happen when there's unsatisfaction, when there was a claim and it wasn't really processed nicely, when there was a call to ask for something and it wasn't explained nicely, when I do not understand and I've been educated more. So the more people start acquiring insurance, the more educated they start becoming. And if your solution is not improving with the clients, then they start seeing you as not delivering what they want. That's when switching starts to happen. But in that market that I've been, everybody stuck to their insurer. But the moment that they switched, it was because something was not being done nice, not because per se of products, changes, claims, or premium, or sum assured, but mostly it was how am I getting the service? How is it being delivered to me? And what do I know right now? And where are you with me?
Anyone with an addition to that?
Yeah, I'd just like to add that, you know, the problem or the risk of switching behavior is something that we tried to take care of at the design stage of our platform, and as a strategy. In our case, we actually avoid direct comparisons between the same product. So we partner with underwriters who can now partner with us to market the products. And this is what we are trying to avoid. As we had in the earlier presentation this morning, the comparison platforms, yes, they've been there, but they haven't quite shown the kind of volumes that would completely shift the needle. And therefore, we tried not to be that. We tried to have real partners who can then work on real issues. In other words, we are taking the responsibility of identifying a reliable partner so that we tell the consumer, look, we can offer you this product, but we also assuring you that we have a good partner behind it. We sort of talk for the partner, and therefore you really have no need of comparing and switching from underwriter A to underwriter B on our platform. If you don't like underwriter A, you probably would then go and find underwriter B, but outside our platform. And what we've seen with that so far is that you tend to have people trusting you a bit more because they believe you're not just, it doesn't then become a price issue, because usually what then happens, they tend to just compare the price. And sometimes when price is the key factor, a lot of other things become secondary, but maybe it is these other things that are important. So we tell them that we don't necessarily have the cheapest product in the market, not all the time. We try to get the best value, but what's more important to us is what kind of partner, what kind of underwriter. Is this someone who will reliably settle your claim as far as we are concerned? Are we presenting the best partner to you? That's the question we are trying to answer. Thank you.
That's great. I think, well, that's well answered, and I think we haven't been able to get Agnes back. Sincere apologies. I think she's struggling, and we must be fair to the attendees here and really close. I just wanted to get probably I mean, your last words towards the future of digital insurance, if you were to say it in one or two words. Should I start with Valerie? Or Jeremiah? Because Valerie, you are still on mute.
The future of digital inclusive insurance.
Yes.
The future is bright, but it's going to come at a cost. We have to invest. We have to learn from what we already have. The customers who are already there must be listened to. The technology that's already there must continuously be developed, and the underwriters and other players involved must continuously evolve and adapt to the new consumer that is coming up. And therefore, the future is bright, but it's not going to come on a silver platter. There's work to be done.
Correct. Thank you, Jeremiah. I share your views.
Hi, sorry, in my office. Yeah, I think just for me, it's pretty similar in terms of I see the future of microinsurance being one that's full of possibility. I think that there are a lot of partners that we haven't been engaging in the insurance discussion that will become catalysts of how we reach a broader base of consumers. I think the kind of pairing of broader savings, wealth, risk hedging, and then health products, would also be able to be a more exciting platform to really, address the needs of the consumer, target consumers that we're looking at. And then I also think from a perspective of populations becoming more digitally savvy. I think we'll soon start to engage with the generations who were born with mobile phones. So I think what they'd also be demanding as consumers is going to push us as businesses, and we have to be prepared to respond, adapt, and iterate what is asked of us from the next generation of consumers as well. So I'm really excited, and from a continental perspective, it's really great to hear stories and experiences from different African markets, because I think one of the other areas is also that cross-border collaboration, so that we're not all going through some of the similar pain points in isolation.
Yes, I'm equally excited about the future, Valerie. Thank you very much. The future generation, or the current generation, actually has some digital literacy that is quite advanced, and the future of digital inclusive insurance is great. Tauanda, any final word?
Yeah, I believe the future is more vertical. What do I mean by this? We're looking into getting into different sectors that have never been thought about, integrating more lines that have never been thought about, as Valerie was saying. But we're going to have more what we like to call niche micros, instead of just microinsurance, more niche micros. By creating more niche micros, we're going to have more people invested in insurance. And if the economic factors of any nation grows, the chances that us as insurtechs, as TSPs, will be fighting on a regional basis and rather than on a national basis. And also the future is not only MNOs, as Richard was saying, the future is meant with so many more partners that are out there that we're not even thinking about right now. So that's where we are going, and insurance is going to improve by that.
That's great. Thank you, Tauanda. I think we have come at the end of this session. Thank you for your time. Those are very good take homes, reflections. We continue. I think I want to hand over to the hosts, and I want to thank them for organizing this. Thank you, panelists, for the great insights that were shared here. Over to you, Labi. Thank you.
Okay, thank you so much, Bosco, and thank you so much, Jeremiah, Tauanda, Valerie, for a great session. I think we keep learning new insights, and I'm so glad to see the evolution as well of digital inclusive solutions. I think, as you saw, even in the morning, the transition from freemium models to paid models, I think the future is bright, like everyone is saying, and also we see application of technology in different ways. I think Jeremiah just demonstrated that, and that cuts across conventional insurance as well. So we still see a spillover of some of the innovation that started with inclusive insurance and now being applied to conventional insurance. So thank you so much again, panelists, for your valuable time and for your great insights in this session. On behalf of the TAG and of course FinProfit, we apologize for the fall of Agnes. She was trying to join, but there was a technical hitch to convert her into the panelists as well. But otherwise, it was a great session, and certainly looking forward to tomorrow. So we're back again at 9 a.m. with the first session, and at 11 with the final session. So I invite all of you to join tomorrow's session as well. So thank you so much, and enjoy the rest of the day. Thank you, Bosco, as well, for great moderation. Thanks.
Thank you, Lemmy.
Thank you. Thank you, everyone.
Take care.
Okay, bye-bye, everyone.
Bye-bye.
Bye-bye.